a ceasefire that is pushing the gift nifty up almost 500 points. But the biggest global headline we are tracking this morning is US and China that have ended their high-stakes trade talks on a positive note, with US officials referring to a potential deal. Meanwhile, Chinese officials said that both the sides have reached what they are calling important consensus. Details of those key talks in Switzerland are awaited. Chinese officials have in fact also indicated an official announcement coming in later in the day, and good news for the world. Street has also picked up the same whiff optimism from US Treasury Secretary Scott Bessent and Trade Representative Greer, who had made substantial progress in independent briefings. Of course, neither side spoke of any agreement to cut US tariffs, which is as high as 145% on Chinese goods, or China's 125% tariff on US goods. Let's hear out a word from US Treasury Secretary Scott Bessent, what he had to say about the meeting which he held with Chinese counterpart.
I'm happy to report that we made substantial progress between the United States and China in these very important trade talks. First, I want to thank our Swiss host. The Swiss government has been very kind in providing us this wonderful venue, and I think that led to a great deal of the productivity we've seen. We will be giving details tomorrow, but I can tell you that the talks were
All right, then that's the latest coming in as far as US-China trade deal is concerned. But meanwhile, important comments made from some Federal Reserve officials as well. Now, Cleveland Fed President Beth Hammack says that the central bank needs more time to see how the economy responds to the US President Donald Trump's tariffs and other policies before figuring out the right response. Now, St. Louis Fed President Alberto Mussolem, in fact, was also heard striking a similar cautious note, saying that the central bank should not commit to further interest rate cuts until it is clear whether Trump administration's tariff policies will lead to a persistent inflation or a less serious adjustment in prices.
US President Donald Trump will touch down in the Persian Gulf region, or he may soon be calling it the Arabian Gulf, on May 13 for an official trip with stops in Saudi Arabia, Qatar and the United Arab Emirates. The stakes are high as visits take place, turbulent geopolitical tensions which are on the verge of it. On the agenda will be Israel-Gaza war, ceasefire talks, oil trade, investment deals, and the potential for new policy developments in the areas of advanced semiconductor exports and nuclear programs. The visit is drawing several Wall Street and Silicon Valley titans to the Saudi kingdom.
All right, then keeping it with Trump-related announcements. Now, Trump has also said that he will touch down in the Persian Gulf region, as he may, as Ankur mentioned earlier, soon be calling it the Arabian Gulf on May 13 for an official trip. Now, apart from that, Trump has also pledged to slash prescription drug and pharmaceutical prices in the US by as much as 80% through a new executive order, reviving a key issue from his first term in the office. Now, in a post on Truth Social, Trump said that he would sign the order on Monday morning, promising Americans immediate relief from high medication costs. Now, he even said that the new policy would introduce a most favored nations policy, tying the cost of drugs sold in the US to the lowest price paid by any other country for the same drug.
We have with us my colleague.
If you like this video, then like, share and subscribe to ET Now.